Hi everyone, welcome back to Corporate Decoder, the place where we unpack the complicated world of business and finance. And today we're diving deep into Apple's latest financial report, a true tech giant. And we're going to see if their products are still flying off the shelves like hotcakes or if there's a little more to the story. Before we jump in, if you love getting the real story behind corporate earnings and what the numbers actually mean, smash that subscribe button and join our growing community also. If you want to connect with fellow finance enthusiasts, our Discord server link is in the description below. Alright, so this is a look at Apple's financial performance for the quarter ending June 28, 2025. It's like getting a quarterly checkup for the company to see how its health is doing. Let's dive straight into the numbers that everyone's waiting for, the income statement. The most important part is how much money they're actually making. Apple's total net sales for the 3 months ending June 28, 2025 were a massive $94 billion. That's up from $85.7 billion in the same period last year. So they sold more stuff, which is generally good news. Digging deeper into products, iPhone sales were huge at $44.5 billion. That's a 13% jump from last year, which shows the iPhone is still a strong seller for them. Mac sales also saw a nice boost, up 15% to over $8 billion. People are still buying their computers. But here's an interesting little dip. iPad sales actually went down by 8% to $6.5 billion. That's not a massive drop, but it's something to watch for, especially since the 9-month numbers show a 7% increase. So maybe it was just a bit of a slower quarter for iPads. And then there's wearables, home and accessories that includes things like Apple Watches and AirPods. Those sales also dipped by 9% to $7.4 billion. This category has been a growth engine for Apple, so a slight decrease here might raise a few eyebrows. Now let's talk about services. This is Apple's recurring revenue business, like the App Store, Apple Music, and iCloud. These sales are often seen as more stable and predictable. They hit an impressive $27.4 billion for the quarter, a solid 13% increase. This category continues to be a powerhouse, showing strong growth. Let's look at their profitability. Their total gross margin percentage was 46.5%. That means for every dollar of sales, they kept about 46.5 cents. This is slightly up from 46.3% last year, showing they managed their costs pretty well, even with things like tariffs impacting product costs. Apple spent $8.8 billion on research and development. That's a lot of money going into creating future products and keeping them ahead of the competition. This is a consistent area of investment for them. Selling general and administrative costs were $6.6 billion, still a significant chunk, but kept in check relative to their sales. All of this added up to an operating income, a measure of profit before taxes and interest, of $28.2 billion, and the same quarter last year. Now moving over to the balance sheet, this is a snapshot of Apple's assets, liabilities, and shareholders' equity at a specific point in time. As of June 28, 2025, Apple had total assets of $331.4 billion. That's down from $364.9 billion at the end of the previous fiscal year in September 2024. They have a huge amount of cash and cash equivalents, which are very short-term investments. They ended the quarter with over $36 billion in cash. That's a significant jump from about $30 billion last September. And then there are their marketable securities, which are investments that can be converted to cash. They have nearly $20 billion in current marketable securities and a massive $77 billion in non-current ones. This shows they're holding onto a lot of investments for the longer term. Accounts receivable, which is money owed to them by customers, was $27.5 billion. That's down from $33.4 billion last year. A decrease here can sometimes mean they're collecting payments faster or they've sold less on credit. Inventories are down to $5.9 billion from $7.2 billion last year. This could mean they're managing their stock better, or perhaps demand is outstripping supply in some areas. On the other side of the balance sheet, total liabilities are $265.6 billion, down from about $308 billion last year. This is a good sign, as it means they owe less money to others. They have significant amounts of term debt, which is basically long-term loans, as of June 28, 2025. This stood at over $91 billion. That's a mix of current and non-current debt. Remember, they did take on some new debt this quarter. Shareholders' equity, the owner's stake in the company, is $65.8 billion. This reflects the retained earnings and capital invested by shareholders. It's up from about $57 billion last year. Now let's look at the cash flow statement. This tells us where Apple's cash is coming from and where it's going. Apple generated a very strong $81.7 billion in cash from its operations. This is a key indicator of a healthy business and how much cash the core operations are producing. It's down from $91.4 billion last year, but still a massive amount. In investing activities, they actually generated over $17 billion. This was mainly from selling and maturing marketable securities, while also spending on property and equipment. It's a big swing from a year ago when they used more cash for investments. Now, financing activities, this is where Apple returns cash to shareholders and manages its debt. They used a huge $93.2 billion. They paid out dividends, bought back a staggering $70.5 billion of their own stock, and also repaid a significant amount of debt. This shows a massive commitment to returning value to shareholders. This statement shows the changes in shareholders' equity. You can see how share-based compensation like stock options and restricted stock units affect the equity numbers. They withheld over $2 billion worth of stock for these awards. This is a common practice for tech companies to compensate employees. And look at this, they repurchased a whopping $69.8 billion of their own stock. This is a huge number, and it directly reduces the number of outstanding shares, which can boost earnings per share. Apple breaks down its revenue here by product category. iPhone sales are the largest chunk, as we saw. iPhone revenue was over $160 billion for the first 9 months of the year. Services revenue is also growing fast, hitting over $80 billion for the same 9-month period. This shows the increasing importance of their services ecosystem. This note details their investments and financial instruments. Apple holds over $96 billion in total marketable securities in various categories, from US Treasury securities to corporate debt. This is a significant investment portfolio and shows how they manage their massive cash pile. This section talks about legal proceedings. They mention ongoing legal matters, but state there wasn't a reasonable possibility of a material loss, which is good news for investors hoping to avoid any surprise lawsuits. This is where we see how Apple performs in different parts of the world. The Americas are still their largest market, bringing in over $134 billion in net sales for the first 9 months. Europe is their second largest market with over $82 billion in sales. Greater China saw a slight 4% decrease in net sales for the 9-month period compared to last year. This is an important region for Apple, and any slowdown there could be a concern. This section is management's own look at the numbers and what's driving them. They mentioned that new tariffs announced in the second quarter of 2025 on imports could impact their business. They're talking about global trade tensions and how that might affect supply chains and costs. It's a constant factor for a company that manufactures globally. Let's look at the sales figures again by region. Rest of Asia Pacific showed strong growth, increasing 20% in the third quarter and 9% over the 9-month period. This table pretty much mirrors the earlier breakdown, focusing on product categories. Services continue their strong growth trajectory, up 13%. That's a consistent and impressive trend. Let's look at the gross margin more closely. Products gross margin percentage decreased slightly. We saw that in the notes. It's partly due to tariffs and product mix. Apple is having to manage those extra costs. Research and development expenses continue to grow, as we saw earlier. This is a critical investment for Apple's future. Apple's effective tax rate was around 15.4% for the 9-month period. This is lower than the statutory federal rate that's common due to how they handle foreign earnings and tax credits. Apple believes its cash reserves and ongoing operations will be enough to meet its financial needs. They have $44.1 billion in manufacturing purchase obligations, meaning they're committed to buying a lot of components and materials. And back to returning cash to shareholders, they repurchased $21 billion of stock and paid out $3.9 billion in dividends just in the third quarter alone. This commitment to share buybacks and dividends is a huge part of their shareholder value strategy. This is where Apple tells you what could go wrong. They mentioned that various factors can affect their business reputation, operations, and stock price. These are things like regulatory changes, economic conditions, and intense competition. This is a list of all the documents attached to this report. Think of it like an appendix at 2E. Okay, let's wrap this up. Now, what's my take on Apple's performance based on this report? Well, Apple is still an absolute titan of industry. Their services division continues to show incredible strength and growth, which is a really positive sign for their long-term revenue stability. The iPhone remains incredibly strong too, driving significant sales, but its growth rate is moderating, which is natural for a mature product category. The slight dips in iPad and wearables, home and accessories are worth noting, but not alarm bells just yet. They're likely managing inventory or anticipating new product launches. The fact that they are still investing heavily in research and development shows they are focused on creating the future products and services that will drive growth down the line. One of the biggest takeaways is their massive capital return program, buying back so much stock, and paying dividends shows a strong commitment to shareholders, but it also means they might not have massive acquisition targets or huge capital expenditure plans currently that would absorb all that cash. The mention of tariffs and global trade issues is important. They are a risk that Apple and all global companies have to manage. Navigating these complex international trade landscapes will be key for them. Overall, Apple is in a very strong financial position with solid revenue growth in key areas and excellent profitability. They are a well-oiled machine, but are they still innovating at the pace that will continue to shock the market? That's the million-dollar question for them. What do you all think about Apple's latest report? Are you excited about their future products or concerned about any of the trends we discussed? Let me know in the comments below. If you found this deep dive useful, give this video a thumbs up and remember to subscribe for more corporate breakdowns. And hey, join our Discord community linked in the description. It's a great place to discuss all things finance. Thanks for watching and we'll see you next time.